Hi, this is Cherie Harrington with the Harrington Group, Keller Williams Realty, and I have my friend and team lender today, Cassie Winterroad from Caliber Home Loans. And we just wanted to hop on here real quick and talk to you guys about what's going on with interest rates. We're getting so many questions every day about what's happening in the market, what's happening with interest rates, and kind of funny story. On my way over to the office about 30 minutes ago, someone reached out to me and just said that I hadn't heard from in a long time and said, what is going on with the market? What's happening? You know, I may want to buy my daughter a house or help her buy a house. And I don't know if I should wait or what's going to happen. So I think there's a lot of nervousness out there right now. People saying, oh my God, is the market going to crash? Those kind of things. So we did just want to hop on with you guys and just talk to you about that. So Cassie, I'm going to ask you, what is going on with interest rates?
What's going on with interest rates? Well, interest rates are going up, but it depends on the day. It depends on the news. What's going on with our economy? What's going on in Ukraine? What's happening with our supply chain? There's quite a few things that are affecting what the interest rates are doing. In fact, we had a pretty good day for interest rates today, although many of you may be noticing that your retirement accounts didn't do so well today. And the S&P 500 is down a lot today. Usually when that happens, it's good for mortgage interest rates. So the reason why today was so tumultuous on the market is because yesterday Jerome Powell, who's the chairman for the Federal Reserve basically is in charge of all of the financial health of our economy. They're they're always looking out to make sure we're in good shape economically, and they're in charge of trying to combat inflation right now. They came out and said that they're going to stay on target with increasing their interest rates over the next few months. And so that kind of kicked everything into turmoil as far as markets go. Consumer confidence is low when an announcement like that is made. And so people just start selling off all their stock. And so they pull their money out of the stocks. And
Good time to buy.
That's exactly, you want to buy when you want to buy in the dips.
That's right.
And actually the S&P 500's drop was the biggest since June 2020, just in the last 24 hours. And it's the fourth decline of more than 3% in less than a month. Wow. That's a big deal. Yeah. So that actually was pretty good for interest rates. Interest rates were all right today. I mean, relatively speaking, as far as history goes, interest rates are not terrible, but definitely higher than what we saw just 6 months to a year ago. Russia and Ukraine, the conflict, any conflicts internationally like that are going to affect interest rates. The supply chain is a big one. That's what's driving the inflation right now, because the cost of goods and services is really high, and the cost of goods and services is continuously increasing, while the value of the dollar is staying the same, and the rate that people are bringing money into their household, the cost of living is going up, but their income is remaining the same, for a lot of people. So it's putting a huge strain on everyone. And the Fed or the Federal Reserve is trying to sort of bring that under control by increasing their interest rates. And then, another big thing with the housing market, and why the demand, a big reason why demand for homes is so high, is due to birth rate. The millennials are they are making up about 43% of the home buyers on the market right now. So the millennials kind of came into the age where they were going to start buying homes maybe 4 years ago, 3 or 4 years ago. So this problem with the housing shortage had already begun before the pandemic even hit.
I
So
would
that's kind of
agree.
putting a strain.
There's been a shortage for a while. And I think an interesting thing about the shortage as well is during COVID, we had such an influx of people, millennials, coming from the Bay Area and Los
Yeah.
Angeles because they were working for these tech companies and they can work remotely. And I had a lot of them come down just in my own business that I helped purchase homes here. So definitely helped attribute to the shortage. And we've had a shortage for a long time here, like you said.
Yeah, right.
So
Because San Diego was more reasonably priced than San Francisco,
definitely, which is funny
which is
because we think
crazy.
it's so expensive, or was, so it's expensive now, but that it was so expensive here, but they think, oh my God, it's cheap. And it's way less expensive than they were paying for rent up there, which is kind of crazy to think about. When someone asks you, like, what is the interest rate today? How do you answer that? Because I get asked that question every day.
Well, it's a pretty difficult question just to answer on the fly. You know, I get that question too. What's your rate today? And the answer is that, you know, which interest rate? There's so many different interest rates out there. It's not a one size fits all kind of thing. It depends on credit score. It depends on down payment. It depends on the loan amount. There's so many different factors that that go into the interest rate that we just can't just say, here's what the rates are today. And as far as mortgage interest rates go, the history of interest rates, we're still doing okay. I think, what did you say your interest rate was on the first time you bought a home? And when?
I thought it was like 18%, but I think it was like 12, and that was 1992. And we thought that was a good rate. We were good with that. I think we've all become so spoiled from these just extremely low rates for the last few years that anything over 4 is like triggering panic.
It is. And then, you know, the difference, it is hard to compare to 20 years ago, 25 years ago, just because the values of the homes are so much higher.
Mm-hmm.
And also level of income is a lot higher. Cost of living is higher. So that, you know, that stuff's all sort of been, you know, trailing along behind the interest rates, the home values. In fact, you know, the average rate in the last 30 to 40 years has been in the mid 6% range. That was the average. And that's where they stayed until like 2010. So, you know, even with that time back 20, 25 years ago with the higher interest rates, we're still at a pretty good average. We're seeing rates, you know, in the 5s today, in the 5s and 6s. There are opportunities to buy a lower interest rate one-time fee called a discount point or points. When people are looking at interest rates online, they'll kind of want to pay attention to that because you're going to see, oh, this rate looks really good. I mean, you're going to want to read the fine print because
there's always a catch.
If it's too good to be true, it probably is.
Yeah, definitely. So tell us about some of these types of loan products. We haven't heard about adjustable rate mortgages forever. So interesting to see that coming back around.
ARMs were actually pretty popular again just before we hit the pandemic. As you know, in 2019, we were seeing a lot of interest only ARM products. That was a really popular one. There was like a 10-year fixed rate interest only payments for 10 years. And that was like a big one that was really good for a lot of consumers. ARMs, the ARMs today are not the same as what they were, you know, in 2007, 2008. And it all depends upon your situation. So an ARM is a adjustable rate mortgage. What that means is you're probably getting a fixed rate for a certain period of time, a set period of time, 5, 7, 10 years, you're going to have this fixed interest rate. And in that amount of time, it just helps you to make your payments more affordable, knowing that you're probably going to either refinance out of that mortgage into a fixed rate if there's a dip in rates and it makes sense during that time, or you're going to sell the house. The average that people hang on to their homes these days is about 10 years. So it can make a lot of sense for someone. It just depends on how long they intend to remain in the home, what they intend to do with it. Maybe they're going to refinance in several years after they've built up equity, and they're going to pull cash out, and then that time they'll refinance into a fixed rate, and then they don't have to worry about the rates adjusting after that 5, 7, 10 year fixed term. And then the interest only arms, those are really good too, where you're paying your minimum payment due is an interest only payment. You're only paying on interest each month, which means your balance stays the same. However, the idea is to make additional payments, so you're chunking down the principal as much as you can over that interest only term, because once you get to chunk down as much balance of the mortgage as you can, then you refinance. You refinance out of it into a fixed rate, and then by that time you have a lot more equity, which will get you more favorable terms. Or again, you sell the home and then you upgrade into a new home, and you've built up a lot of equity by being able to pay more towards the balance of the mortgage.
And I think I feel like these kind of loans scare people sometimes, and we're very conservative with the loans that we've always taken out. But on our last move, and it was right before COVID, we took out an adjustable rate mortgage for our home because we move every 2 to 5 years. So we didn't think we would be in this house very long, and it was a 10-year adjustable, and then the rates went down even more, and we did refinance into a fixed, which is nice. But it is a way to get into something and push yourself out of your comfort zone a little bit, and maybe get a higher price property that you couldn't normally afford. So it's pretty cool program.
Absolutely. And you just want to make sure that you work with the right lender who can give you all of the ins and outs, the pros and cons of each loan product. Make sure that it's something that you're really comfortable with. There is more risk to that type of product, but it can really benefit you in the long run, and it just helps you to get a lower payment for an extended period of time. So that's the great part about that. Another great program that we have access to is to convert buyers into cash buyers. Someone who has, say, 20% in the bank, they can become a cash buyer. There's a lot to that program, so it's something that you can reach out to me about if you want to learn more. But again, as long as you have 20% saved in the bank, or a gift, or you're pulling from your retirement account, you could potentially be converted into a cash buyer, which will make your offers a lot stronger.
Definitely.
When you go to buy
very
a home.
Exciting for me.
And then the non-QM loan means non-qualified mortgage. It just means that it's kind of, I call them outside of the box loans. They're not your run-of-the-mill vanilla loan guidelines that are backed by the federal government. Usually they're usually privately held in mortgage products, private investors. Caliber has some really good products. We have a great suite of products that help with somebody who's self-employed but doesn't show a lot of their income on tax returns, where at the end of their profit and loss sheet, where they've eaten up all of their profits with expenses, and so that their net income is too low to qualify for a regular mortgage, we can do a bank statement loan. There's also an investor loan where we don't have any income documentation. We're just looking at the cash flow of the property. And there's a couple other options there as well. So those are coming more into play now than ever before, just to help more people get into homes.
Excellent. I'm glad to see some flexibility there. And this is a super powerful chart, I think. So rates, depending on your credit and whatever else you have going on, around 5%-ish right now, right? Close. I know you don't want to give me an exact number. Okay. And
Sure.
then looking at it going all the way up, like if it went up to 6.25 at some point, I mean, that's a big gap. It's $500 a month that can affect your buying power. And you had a good thing that we were talking about earlier, that the interest rate on rent is 100%. I love that. And I'm going to use that a lot going forward. Thank you. But I think people, they get scared by the interest rate, but they need to take the payment into consideration. If you can make the payment and you're comfortable with it, even if it pushes you a little bit, it's almost always better to own than to rent, because you're paying your landlord's mortgage if you're renting. And if you own your own home, you're paying your own mortgage and you're creating wealth. And this is the absolute best way to create wealth, is through real estate. And the prices in San Diego County for homes have gone up 20% year over year. I mean, some areas in La Costa where I live, it's been almost 30%. Some months it's a lot, and they're still going up. Even with the interest rates increasing, the home prices are still going up. So this is a great way, like I said, to create wealth, and just have a place that's your own, that you can do whatever you want to it, and your rent's not going to go up every year. And I think what were we talking about earlier? The rent is projected to go up like 18% or something in San Diego County.
It has gone up 18%.
Has gone up 18%.
Yeah, depending upon where in San Diego County you are, 18 to 20%, which is huge. Usually it's in the single digits.
Yeah, it's a lot. And I know just from being on some of the Facebook forums or groups or whatever, people are like, oh my God, my landlord just raised my rent, or they're going to sell my place. I'm desperate. I need to find something, and I'm paying, X amount, and now I'm going to have to go $1,000 a month more to find something else. And it can be devastating when your livelihood is in the hands of somebody else. So a good thing to own your own home, for sure. So Cassie and I work together a lot. I mean, we've been working together for the last 3 years, I would say. It's been about 3 years, and she does the bulk of my buyer's loans and my team's buyer's loans. And even though the interest rates are going up, we're still seeing multiple offers, not as many offers. So before, where we would see 15 or 20 offers on a home, now we're seeing 2 or 3, depending on the price point. The lower price points are still seeing more than that. So the correct representation when you do decide to purchase something is so important. And we work together in lockstep from the point of getting you pre-approved. Cassie will get you pre-approved. I'll help you find a home. And then when your offer is made, Cassie is copied on it. And then she immediately sends a video email to the listing agent, and then picks up the phone and calls the listing agent. And so that we're starting to build rapport with that agent immediately. And before all of that happens, when I'm writing the offer and getting ready to write it for you, I'm talking to the listing agent, building the rapport, finding out, what are the seller's needs. A lot of times it's not just about price. Sometimes it's about short contingency periods. It's about the close of escrow. It's about rent backs. Maybe they want a really fast escrow and they just want to get out of there. Maybe they want a 30-day escrow and they want a 60-day rent back. So it's just really the agents and the lender speaking with both of us, so that we know what the seller wants and we can provide that in the offer. And getting somebody that knows the market. This isn't a time right now to use your aunt or your grandma's best friend or whatever, who sells 1 or 2 homes a year. They don't know what's happening in the market. And the market has changed so much in the last week. It's insane. It's like constantly changing. So it's really important to understand what's happening and that your agent is able to write a clean offer. I just had one of my listings going to escrow, and I got the most messy, sloppy offers I've ever seen in my life. And it's embarrassing when you have to call the buyer's agent back and say, you missed a lot of boxes and didn't fill this out completely. So who you work with matters 100%. And we're here to help you guys. So if you have any questions at all, I'm going to give you our information here. And Cassie, did you want to add anything before we close out?
You know, there is something to be said for, you know, who you work with matters. I will say that there are plenty of times where there's a property on the market where I recognize the name of the realtor. So, meaning that I've worked with them before, I've spoken with them before, and I'm sure I know the same goes for you, Cherie. You know, it is a fairly small community, you know, as far as the realtors go and lenders. And so a lot of times, just based on experience and number of transactions that, you know, we've been involved in the market, the chances are good that we might just know the person. We might know the seller's realtor, and that helps to get them to answer our calls and makes them more comfortable.
And it helps to get the offer accepted. I mean, whether any of us want to admit it or not, we want to work with people that we've worked with before and that we know are good at what they do, and they're going to follow through on their commitments and be a good communicator, because that's a big deal to me. And you and I have worked together where you knew the other realtor or I knew the other realtor, and it really helped everything come together, and it makes it a lot easier for the buyer to get their offer accepted. So 100%. I agree with that. So I think that's all we have, but you guys can reach out at any time. We'll do these updates every once in a while just to kind of keep you updated. Don't watch the news and take, you got to take everything with a grain of salt. They always want to instill fear and panic in people, and it's not a time to panic. You just have to understand what's going on and just work around it. So thank you, Cassie. I really value our partnership and our friendship.
Thank you. I feel the same.
Thank you.